Good afternoon. It's Saturday. It's 3:16, 213, 10:20 a.m. We got the overbought bull run with a weekly chart. Yes, we were buying the 195 puts that MMT told us about. They went from 532. This is the monthly what a great trade this was on the 195 puts at wholesale down here at $5.50 to $6 a contract. That was calendar monthly 316 that expired yesterday. Now, what we will take a look is what the following week looks like. And we'll take a look at this put option that got to 286. This is a 185 put that is right at the strike. It's 405 by 4 1/4. It has a range there, MMT. The 190 put hits 490 and the high is 758. We're going to be all over this one, the 190, on Monday. So what we'll do is we'll put the 190 put, the 185 put, then we're going to talk about that Netflix. Like all of them, notice that you had $85 million worth of sales. Anyone in their right mind back in the day in 2011, we were short Netflix. It got on sale down here. They popped the earnings. They ran it off of the bottom. This was the earnings last quarter, straight up to the highs. So let's take a look at this so that we are prepared for next week to make a lot of money on Netflix. And you can see the multi-year weekly high cannot take out that resistance level. Let's draw a lower trend line for the MMT where that support level is on this weekly level, and it happens to be right here. So it's a multi 5 week up at the resistance and that support, and this thing doesn't break this area down here. The last time that we had dips and traded it on the call side, we got down here, but we're overbought. We're not as overbought as we were. However, still we are overbought, and the 10-week moving average is down here. Once we break the support level, and or it's possible that the resistance level, that is a strong resistance level, which makes that 190, 185, 190, and 195 puts, when this thing comes up here below 200 at 197, those $200 puts and 195 puts are on sale. And right here, let's just take a look where Netflix on the weekly level, that's the big earnings, that's your multi-year highs. Look at that resistance level. Look at the sell wicks on the top of the weekly bar. When we break that support level, we're going to come down. The next support level is going to be right around this area on Netflix. And it's going to be about this half weekly bar, somewhere right in here. The top of this bar is going to be 170.01 pennies. That's the high of this weekly breakout bar on 120 of 2013. And the 10-week moving average is at 164. That's $20 below the price. They will come down and test it. And Netflix is overbought. And we got it up there toward our price target right below that 200, and it was time to trade the bottom up. And so I'm selling short, and then I go long, and then I sell short, and then I go long off of the bottoms during this weekly consolidation. The weekly consolidation, though, is that any gap up, we're selling it. And this is the Netflix trade. And I've already featured the Netflix 185 put, which is this one right here. Here's a 190 put. I've featured the 185 and the 190s, and we'll be all over that trade right along with the 195 on Netflix weekly resistance level and the trade management for 322 week with a major calendar FOMC meeting that could put a lot of volatility in the markets. Markets are overbought. Stocks are overbought. They're going to correct. We want to get that side of the tape to pay us. Then when they get to their support levels, we'll get long in the trading ranges.